Welcome to the Scam Economy with your host, Matt Bender.
Yes, it is episode 2 of the Scam Economy. I am your host, Matt Binder, and we're coming off a big premiere week of this show. I want to thank everybody for tuning in last week to the first live episode and for downloading the first episode of the podcast. Show is currently up wherever you listen to podcasts, Apple Podcasts, Spotify. I've heard there's some issues with getting it off Google Podcasts. I'm on it. I'm working on fixing that. I'll let you know as soon as it's up there. I want to thank everyone, first of all, for all your support. We got tons of reviews coming in, all, really great. People seem to really like the first episode with David Gerard. We peaked on the Apple Podcast top charts for technology at number 6 on the very first day the show was released, and we stayed there for a few days. I think we even hit number 6 right before the first episode went live, too. Really can't thank you all enough for the support. And there's a lot of great stuff to come. And one of those great things I'm talking about is this very episode. But before we get into this episode, I want to let you know that you could support this show by going to patreon.com/MattBinder. And if you would like to financially support this show, you could do so there. It helps the show grow. I could do more things with a little funding. And I really appreciate the support. For all other ways you could support the show and where you can find all the links to the various podcast platforms, YouTube, whatever, go to scameconomy.com. Now, at the end of our first episode with David Gerard, we touched a little bit on stablecoins. We also talked a little bit about crypto as a Ponzi. And now both of those things are very connected. And so for this episode, I wanted to go into a little bit more about stablecoins, specifically Tether, and how it props up the scam economy. We're still sticking to very basic, straightforward stuff. I want people who aren't familiar with this world to really get an understanding of it, especially in the early episodes of this show. And I happened to come across a great article that did just that on this very topic. So, joining me now is writer Sohale Mortazavi. He recently wrote a piece for The Jacobin, and it went extremely viral on, where did it go viral? On Reddit? And I think I saw it getting some play on Twitter too. Is that correct?
On Reddit at first, I kind of hit like all through the technology subreddit. And that was kind of pretty positive, I would say, response to it. And then from there, I feel like all the like Bitcoin show people kind of picked up on it. And it kind of moved over to Twitter at that point, with a lot of people sending me clown emojis all day long.
Of course, right. But on Reddit, it had a lot, like in the tens of thousands of upvotes in just one channel and one subreddit, I should say, and it was in dozens more. I think I saw. So it got some real play, and the reason why is the article is very well done and probably angered a number of hardcore cryptocurrency advocates. And, the title of the article is "Cryptocurrency is a Giant Ponzi Scheme," which, again, was sure to rile them up, right? I mean, it's right there in the title.
Yeah.
But I should say it's true. And, in the second episode here of this show, Scam Economy, I thought your piece was a perfect, really accessible explainer to people as to why that exactly is the case. A lot of like we talked about in episode 1 with David Gerard, a lot of what cryptocurrency pushers like to do is they like to use very technical jargon and show off that they know this and that. And if you don't know, you just don't get it. That's a very regular thing in this space. But it's really
you understand.
Yes. And it's a way to, if you don't understand, you don't get it. So that means, who are you to criticize it? Or you just don't see the utility of it. But the thing is that that's just all a facade, a way for them to hide behind a curtain, because there really is no utility to any of it. So explain to me why You make the case that cryptocurrency is a giant Ponzi scheme.
Yeah, I actually listened to that episode with David Gerard last night, and I thought it was great. It was a really good explainer. And towards the end, you guys kind of started talking about Tether, which is at the heart of this. And he kind of made the case that whenever you say this, like the cryptocurrency is a Ponzi scheme, like all these people come in and they're like, well, it's not technically a Ponzi scheme. And, like he said, it's kind of giving up the game at that point. Once you're saying not technically, you're admitting that it, basically is a fraud, which it is. But still, these people come in and they're kind of like, well, a Ponzi scheme is X, Y, Z. And like, there's some truth to that. Like, there is like the classic Ponzi is typically like a hedge fund or some kind of investment fund that lures in new investors and then pays out old investors with their funds. And the fraud there is that they're like the new investors are being led to believe, or so all investors are being led to believe that the returns are coming from legitimate business practices, and that is just not true. The principal is usually pocketed by the person running it, or at least dipped into, and like that's the fraud, and like that's the classic Ponzi,
right? And it's interesting too, because like when it comes to crypto, like. What would just common sense thinking, what would that business practice be? Now, I'm not buying a product, I'm not buying a service. What is being sold here? Like, where's the revenue coming in that I'm what is it that I'm investing in? Like, I pay money, I get more in return. How is that happen? Like, you think there would be that very basic question up front to people who are, not in on the Ponzi, the people who think that they're not investing in a Ponzi.
Right. And so the thing is like, that cryptocurrency isn't like that, at least on the whole. I mean, there are these like very Ponzi-like ICO coins that we won't get into, but on the whole, like Bitcoin isn't like that.
Right.
And that's because it's the conceit of cryptocurrency is that they know this, like that their funds, like they're buying from someone so they can sell it for more. Like it's like they know that the money is coming from other investors. They're fine with it. It's like a zero sum game, negative sum. We can talk about why that is.
Well, again, we should say that the they here are, yes, it's the people who probably have the biggest holdings here, but also there's a lot of people who have put a lot less money in the aggregate, but probably a lot of money to them, who don't actually know this.
I think they do, though. They know that part. I mean, they know at least that they think it's speculation that's driving it. So they do know that they're buying from someone else. I mean, maybe like, I guess if you don't think about it at all, there's probably some like very young people who haven't thought about it. But anyone talking about Bitcoin, I mean, like, it's just the conceit of it. Like you're buying this thing that you can sell later for more. So that's like the fraud part in a typical Ponzi is just to get accepted with them.
Right.
So that's not really fraudulent per se. The fraud, though, is that that's not actually true. Like they think that the price is being driven by speculation.
Exactly.
When it's actually being driven by market manipulation.
Right.
And this is what my Jacobin piece was all about, which gets into stable coins and all the fraud going in there that's kind of driving that market manipulation.
Right. And we like you mentioned in my conversation with David Gerard, we ended on stable coins. That's just how the conversation ended up going. But what a perfect segue into episode 2, where we will now be talking a little bit more about Tether specifically. And there's a lot to talk about when it comes to Tether, but let's basically, we've already, for people who don't know, actually, let's actually do this. If you haven't seen episode 1 of this show and you're not familiar with what a stable coin is, what is a stable coin?
Yeah, so I mean, I would make the argument that there's really only 2 kinds of cryptocurrencies that people actually use, and people are going to like totally shit on me for saying that. And they're going to be like, no, like there's all these coins that do X, Y, Z and will solve these different problems in like various industries. But that's just like all hype and buzz. Like there's only 2 kinds that people actually use. And the first one is like Bitcoin type asset coins. And these are coins that are traded on exchanges, just kind of like any other commodity or any other financial asset. Like you go onto an exchange and you can like trade with other traders. The other kind is what Tether is, which is called a stable coin. And I feel like people are less familiar with this. And I think a lot of people who actually use them don't always even realize that they actually are using them.
Right.
And so what a stable coin is essentially is it doesn't fluctuate because its price is pegged to a fixed entity, which is in most cases it's $1, like with the case of Tether, which we will talk about. One Tether is worth $1. And that is because Tether said so. They said that one Tether is equal to $1, and we're going to issue these digital tokens, and that's what they're going to be worth. And the justification was because they claimed was that they had $1 in reserve for each Tether they issued, and insinuated that people were buying them from them directly, which all turns out to be a lie. They're not backed. Their latest public attestation claimed they have 3% of reserves in cash, which also might be a lie. We don't really know. They're mostly backed, according to them, are mostly backed by commercial paper, which are kind of like IOUs from companies. But I mean, all this is just mystification. Like, we don't know if these companies exist. They could be owned by the same people that own Tether. They could be like, printing Tether, buying Bitcoin, saying that the Bitcoin is backing the Tether. Like, it really doesn't matter, because the point at the end of the day is they're just printing these from thin air. There's no regulation. They just like print them and they send them to the exchanges. And I should also say that the people who own Tether also own Bitfinex, which is a major unbanked exchange. It's based in it was headquartered in Hong Kong originally, and I think they're banking out of the Virgin Islands. It's a little like they're kind of hard to find in general at this point.
Right. Always a good thing to have when you're a large financial institution of claim to be, at the very least, when you can't find where the company's actually located, or you do know, and they're located in a place like, the Virgin Islands or the Cayman Islands or some other, wonderful hub where tax, avoiders go, and other great individuals go to start businesses specifically.
Yeah, I think right now they're I guess, banking in the Virgin Islands is the last I heard. I think this came out in the Panama Papers, and this is actually the Paradise Papers. Sorry, which is actually how we know that Bitfinex and Tether share a parent company called iFinex. But yeah, it's just, it's all like just shady stuff.
Right.
So the claimed point of these stablecoins is that a lot of these exchanges operate overseas and they don't have good access to banks. Tether, for example, lost access several years ago. I think Wells Fargo cut them off. They didn't give reason, but it was basically money laundering stuff. It's like very shady. They didn't want to be involved with it. And so at that point, this is when they really started printing Tether more and more, because they needed it to provide liquidity on exchanges. Because, when you go to an exchange, obviously, you don't buy cryptocurrencies from the exchange. They're custodial services that facilitate transactions between traders. But to do that, they have to be able to change people in and out of dollars. But these exchanges don't have dollars, certainly not like at the level they claim to anyway. So this allows traders to move in and out of like Bitcoin positions or any kind of asset position or any crypto asset position. And which is what people do, and they do get used this way. It actually is it's not a legitimate, it's like a functional use that it actually facilitates trading.
Or if you're looking to like put your money in an exchange, I guess, and you have to pick a crypto for it to sit there because you're not sure what you need it for yet, but it's in that exchange. A stable coin like Tether is usually what you would keep your money in. That'd be the form of crypto you keep your money in, because the price isn't moving anywhere. Whereas if you leave it in Bitcoin or Ether or any other crypto that isn't a stable coin, your $200 could be $300 tomorrow. It could be $50 tomorrow. You don't know.
Right. So yeah, it's like when people want to go into like a cash position, but there's no cash on these exchanges. So that's the claimed legitimate use. The issue is that they're issuing tethers like at an exponential rate. There's no possible universe in which they need all this to facilitate daily trading volumes. And so the question is, why are they doing this? And so researchers have looked into this. And I think I brought up in my piece, there's like a 2017 paper by two researchers whose names I'm forgetting right now. We should put it in notes or something. They kind of looked into this, and they were some of the first people to look into this. And what they discovered was that on Bitfinex, tethers were being used to buoy the price of Bitcoin whenever it was falling. And it was like, in a pattern that was very clearly market manipulation. And this is also been like confirmed by other people as well. Like people, like the thing is, this is all on the blockchain. Like Tether at the time was on the Ethereum blockchain. I think now it's also on Tron and a few other blockchains. But it's all out in the open. Like we can see what they're printing. We can see where it gets sent. So we know this is happening. We know they're not burning these tokens.
So just to be clear for people, to really, because I really want people to understand this, because a lot of crypto shows out there, if they do even cover this, they're going through this with even more, like we were talking about earlier, technical jargon than we're even. But let's even really break it down even more for people. So basically, what's going on here? Then correct me if I'm wrong. Tether prints up all this Tether. Like the company that runs Tether prints up all this Tether, and when they see the price of Bitcoin falling, in order to prop that up, they use that Tether, which isn't backed by anything. They're just printing it up out of thin air, monopoly money. They use that Tether to buy up the Bitcoin, to drive up the price of Bitcoin. Now remember, there is no actual U.S. dollar or any other, pound in the U.K., a euro, nothing actually that's real money is being put into this when they use that Tether to prop up those Bitcoin prices by buying up Bitcoin so the prices go back up.
Yeah, that's the allegation. Yeah, I mean, it's actually not a very complicated scam. Right. I mean, that's what the researchers allege. That is what a 2019 class action lawsuit alleges. And it's just like common sense. Like there's no other real reason why they would need to keep printing like billions and billions and billions of these. Like and they never burn them. Whenever they stop printing for a few weeks, which has happened every like 6 months or so, the price craters, which happened recently when the price cratered. I think it happened back in November. I think last March. Don't quote me on those dates. But if you go and look at the print, if you go to coinmarketcap.com, you can see the market cap of Tethers and the total in circulation, and it just maps on perfectly.
Right, and there are public. I've seen Twitter accounts for one example that actually track. Because again, this is all on the blockchain, so it's all accessible information and data that anyone can go see. But there are data trackers on Twitter that actually tweet out when Tether prints up, when Tether's printed up, and exactly how much is printed up. And just out of the blue, out of nowhere, you'll see these huge sums of money in Tether printed up and released out there, and you know that there's no way this influx of actual U.S. dollars that Tether claims that it's backed by, that much money just didn't go into the into Tether to back all that Tether that was just printed.
Right. And it's usually, it's getting exponentially more and more. So now we're getting to the point where it's $1 billion or $2 billion a week often comes out. And it's pretty hilarious. It's always in very round numbers. You think they would at least try to fudge it a little bit, but they don't. But yeah, some of the Twitter accounts following this are pretty hilarious. And I might be saying his name wrong. Is it Paulo Arduino, I think, who is the CTO of Tether. Right. Has even responded to some of these, and his it's just comical. He's trying to explain away why they're sending $2 billion out to Bitfinex in the middle of the night on a Saturday or Tuesday morning or something.
Right, and they've gotten into trouble with we're getting into regulation in a bit, but there have been, for example, in New York, Attorney General Letitia James went after them, didn't she?
Right. Yeah, they were banned in New York for a while. I wish I should look this up. Are they still banned in New York? I know that they settled a lot. I think they settled for $18.5 million.
They settled, yes. There are exchanges that are banned in New York. Sometimes you'll go to sign up for crypto.com, the wonderful namesake of the crypto.com arena, formerly the Staples Center. I know that you can't use them in New York State because they don't have the proper licensing that New York State requires for an institution that's providing financial services.
Right. And I'm guessing that New York has been kind of more on top of this than everywhere else. I'm assuming because, the stock exchange, all the financial center that New York is, it makes sense that they would have more regulation. But the rest of the states really haven't. Like, there's been attempts at regulation now, and I feel like the DOJ and the SEC are kind of closing in. But I mean, our country is basically ungovernable with our political system, and so like any like actual bill, like the Stable Act that the Stable Act that was introduced, I think by several. I think it's bipartisan. I think there's a lot of Democrats and a few Republicans tried to put forward is just like kind of dying in Congress. Biden did like a investigation recently, but it's just like it's all moving very, very slow. And it's just really unfortunate. I feel like until it really blows up and a lot of people get hurt, like it's just nothing's going to be really done about it.
Yeah, we have a very reactionary government, not it's got something's got to happen first for anything to happen. A bridge has got to fall before we start caring about an infrastructure. Some people have to get hurt. But it is ironic that, and this isn't for everybody, but like I spoke with David Gerard in episode 1, there is a certain type of crypto advocate and fan and investor and, promoter that does have an ideological bent, and they tend to be libertarian or right wing. And it is ironic to me that the very thing that they usually have this laser focused critique of the United States government and our financial system and the Treasury is that basically the U.S. just prints up money whenever it just prints up money. And they've backed a system where A, that's happening, and B, it is even, there's arguments, obviously, that, the government prints up money and it's actually good for the economy when that happens. But there's no such government backing Tether or any other crypto. And in this case, that printed money is being used for pure market manipulation.
Right. Well, it never makes sense because those people are, they point to the 2007 and 2008 crash as like the reason that we needed Bitcoin. But the thing is that the issue with the crash was because there wasn't enough regulation and there was all this shady stuff going on in legal markets. And then that was kind of shut down after the crash in, again, a reactionary way. And it's now being under the Trump administration, a lot of those regulations were kind of rolled back. So we're seeing it again now. That's probably a topic for a different podcast. But yeah, so to me, it's just misdirection. It's like you were saying earlier, they use all this jargon and this techno babble that is just trying to mystify and convince normal people they just don't understand, and that doesn't make sense on its face. And I think it's just more of that. It seems like to me it's all very insincere. Like I said earlier, I've been getting a lot of harassment from these people, which is totally fine with me. I think it's kind of funny. It doesn't bother me, but it's been interesting to watch because you do get a lot of right wingers coming in with this libertarian rhetoric, which doesn't totally make sense, but is kind of just par for course. And then the other thing I've gotten a lot of is there's this new branch of progressive Bitcoiners that are kind of trying to greenwash the Bitcoin movement, I think.
Yes, I wanted to bring that up
I've
with
actually been engaged.
Because, obviously, you wrote this for the Jacobin, and it just makes sense to talk about this. Obviously, I'll probably have a number of those very types of people on this show. There's people who, like you said, make the argument that, and I've gotten it all the time, and this is usually how it's brought up to me. Progressives / socialists / the left. Maybe they'll name all three, maybe they'll just name one, but it's usually in that grouping of people, are making a real mistake not getting into cryptocurrency. They are letting the right wing take over this space. They should really get into it because it is actually a progressive / leftist / socialist thing. And, the idea that it isn't inherently a right-wing space. It's not like right-wingers took it over. It literally was developed by people with that sort of libertarian ideology. It's inherently ingrained into the very foundation of the blockchain and Bitcoin. And then as a result, all the other cryptos and Web3 related stuff. So you've gotten those people coming at you, I assume.
Yeah, I have. And to me, it's just, I mean, I've actually engaged with those people more because I find it more interesting. They tend to be like less trolling and they try to like engage you like a little more thoughtfully. But at the end of the day, it's kind of like the same argument, just sort of like rebranded but in greenwashed. You feel like you get the same kind of misdirection. Like they do the same kind of like whataboutisms. Like the right wingers will be like, "Isn't the entire economy like a Ponzi?" And I'm like,
What I get,
"No, it's really not."
what I've already gotten was because the name of the show isn't everything the scam economy. Like, isn't the economy itself a scam? But you're right. Like, it is a misdirection because the idea that being a cryptocurrency critic or even anti-crypto means that you are pro the system in place is just a fraudulent argument. Because they come from the
Right.
idea that you know the current system is bad. This is the alternative presented to us. Alternative to what is bad must be good. And that couldn't be further from the truth. In fact, I think it has all the makings of being possibly even worse. I mean, it can be worse. Obviously, there is an entire history of and that's produced a very powerful, wealthy people and institutions that hold up the current system. But that's the only thing holding back crypto, in my estimation, from even being worse. It's just too new to be at that point, to be at that level.
Right. Yeah. I mean, to me, like being on the left, for me personally, is that I believe that the economy should be brought under greater democratic control. That's like how I see being on the left, at least in economic terms. And cryptocurrency is just like obvious. It's like the exact opposite of that because like you're privatizing the entire financial system. And like the issue with like central banks, I think like central banks should be brought more under economic control. You have these like technocrats right now controlling them, but the solution to that is not to hand it over to like Peter Thiel or something like I want more democratic control, not less. And you're just privatizing. So I'm not like in the like anarcho whatever like realm of the left in any way. So to me, maybe that's just like my shortness of vision, but I just don't see how you can make any kind of left case for like privatizing the financial system and handing it over to private actors, which is really what's happening. And people I think people on the left Bitcoin world would be like, well, you're handing it over to the people, but that's just not true. Like the Bitcoin like blockchain is just like a blockchain. But there are like anyone can make a Bitcoin blockchain, anyone can make a stable coin, anyone can make an exchange. And so like in practice, these things are being driven by private actors and they're being driven by unregulated private actors. And like that's the issue. And one step beyond that, I would say that there's just really like you you can't regulate this because it doesn't work. Like it is a scam. And like crypto only works, like it's inherently inefficient. It's inherently a negative sum game because it takes massive amounts of electricity, which I know you've talked about before, to run these blockchains at scale. And so they kind of can only operate at small scale or at a loss. And the only way that they work is as a Ponzi. And so, like, if you regulate
Let's
them, they
actually get
will go away.
right. Right. Let's actually get into that a little bit more, and then we'll get into what should be done. But I want to sort of really lay it out here because you bring up how how integral and this is should be obvious, although even crypto advocates argue against this. But to me, it's just so nonsensical. Just the overall power that crypto miners, let's take Bitcoin for example, have over that crypto that they're mining. I mean, in your piece, you lay out just how much money they put into mining crypto, mining Bitcoin, I should say, and just how much of it just evaporates, which in turn takes that money out of this market that desperately needs money for people to even cash out. Could you go a little bit more into that?
Yeah. So there was a researcher who put out a really fascinating blog. It's a little old now. I think it was from maybe March last year, who kind of like just did all the math on this. And again, I can send you a link to that later if you'd like. Or I think it's in my Jacobin piece, actually. And he was calculating that it was now about $1 billion every month that was being spent on mining. And it cumulatively was like 20 billion at the time he wrote it. And I think it's closer to 25 billion now has been sent to miners. And some of that's profit for the miners, but a lot of it actually is just going into electricity costs. Actually, I think he actually calculated just the electricity cost. I think the actual money going to miners is even greater than that. So they're keeping profits too.
I just want to hate to cut you off here, but I also
No,
this is something where crypto people also it's a common thing when you bring up the miners and their role in crypto. They like to play down just just how much they hold. I mean, this is a huge investment for them to make. We're talking equipment that cost millions and millions and millions, if not even more than millions of dollars.
Right.
And then the energy cost, like you mentioned, there is a huge amount of money. There is a huge amount of money that they are making because otherwise it would not be worth it for them. Like they're doing all of this because the trade-off is completely worth it to them.
Mm-hmm. Yeah. And yeah, it is. I mean, that's the thing. I mean, like people make money in Ponzi schemes all the time. And the miners themselves, especially like the big industrial farms, which is all mining now in the case of Bitcoin, are turning a profit, like you said, or they just like wouldn't do it. And there are people even buying, if you buy and hold and sell long enough before it collapses, like you can make money off of it. But so the thing is like the miners though, like a lot of that money is going to them, so they're taking it out of the system, and then also they're burning it to run these mining farms. And if people haven't like seen these, they should like Google them because they're just wild. They're like warehouses of like computer graphic cards, just daisy chained like up and down. It looks like an Amazon warehouse of like video cards. It's truly wild. And I think we should say also, I mean, as people say famously, I think it's now taking up 0.5% of all of the world's electricity usage. And this is linked to the price. The higher the price goes, the harder it gets to mine Bitcoins. This is inefficient by design.
I wish people
this is how
I wish the mainstream public knew that I mean, there are people who know obviously, but I wish more people in the mainstream knew that this is a major part of why you can't get certain parts for your computer rig, like you just want to use for work or for, as a hobby or for fun, entertainment, or your video game consoles. Like this is the reason why that you either can't find it or you're seeing the prices of it go way, way up. It's because these mining rigs are taking up all of it.
I know, yeah, like mining graphics cards that were like a couple $100 a few years ago are now running like $1,500 or something, 2,000. I've seen. It's like just crazy prices. Which again is more. That's like more money that's like going into this. It's just like gone. And I guess they could resell those later on when this all collapses. But the costs are real. And so at the end of the day, the point is like
I'm sorry, but not even really, because the strain that mining puts on some of this stuff is, I know that there was a hard drive shortage when this crypto, I think it's called Chia, was launched, and it was the big sell here was, instead of using graphics cards, it was using hard drives to mine. And people were going through these hard drives, and obviously the strain on a hard drive is much worse than a strain on a computer, like a graphics card. But you're ruining these hard drives are ruined after going through the system on a number of different cycles, and then they gotta not only buy new hard drives to grow their rig, they have to buy new hard drives to replace the ones that have just been put through the system here. Again, hard drive a little bit different than graphics card, but some of this stuff they won't even be able to resell because it'll just be ruined from mining.
Yeah, and that's probably true of the graphics cards as well. I'm sure they have a limited life. And there was an article, might have been in the Financial Times recently, somewhere, that was talking about like the per transaction e-waste that was being created. And I'm forgetting the figures, but it was like wild. It was just so much just like waste.
Right.
Yeah, it's just wild. But yeah, so the thing is, to me, the important part about this is that these are real costs. They have to be paid. And the higher the price goes, the higher the costs go. And I don't want to get too into the weeds on mining here in
Right.
this episode because it seems like off
Oh, there's a whole
off subject.
that's like probably everything that I am going to talk about on this show can probably have its very own like like podcast series on just that one aspect. Like it's incredible just how involved some of this stuff is. Let's get to we briefly touched on regulation and how it's just gonna it's not really, you can't regulate something that's an outright scam from the get-go. And how also I think another thing is I think it will add legitimacy to it. I mean, do we really want to legitimize this whole industry?
Yeah, I mean, to me, and this is in my piece, I made the argument the only real solution, and I'm willing to get pushback on this, but to me, it seems just to ban it outright. And by that, I mean just ban the trade of cryptocurrencies entirely. And that would be hard to enforce because they're on private networks. But what's not hard to enforce is banks doing it. And right now, you have like all these unbanked exchanges, like trading in tethers and manipulating the price. But everyone who's actually cashing out of the Ponzi scheme is doing so on a regulated exchange, either in the US or in South Korea or someplace where they have actual, banked or exchanges with like regular banking relationships. And for the most part, I mean, I'm always like a little suspect of these exchanges because they're not very well regulated either. But for the most part, they're like following like some standard banking regulation. But they're the off ramps. Like without them, no one can get out of this. No one can get into cash because that's the whole point of this. Like, I don't even think like the tether scam isn't to like drive up the Bitcoin price and then go sell it for as much as you can. Because like there's just not. I mean, the point is to like get people to buy into it so that you can then sell it out for cash on a bank exchange, which is again how Ponzi's work. And so if you take away those cash off ramps, the whole thing just falls apart. Like you can manipulate the price of Bitcoin as high as you want, but if you can't trade it for actual dollars, and there's no point. The costs are real, so the miners are going to stop mining, the prices will fall, and the whole thing goes away. Or at least I think would go back to being like it was, like cheap coins being traded between enthusiasts.
Right. I mean, if you watch any like if you watch like any of the meme coins when there is a big sell-off from a whale, once they, regardless of whether it's a rug pull, or a rug pull again is when the coin founder decides to pull all his holdings, which is usually a lot. When the whales sell off, you'll see that once it gets to a point where there's not enough money for everyone to cash out, like people have their investment is stuck in a coin, that's when that coin's completely dead. But then, of course, at that point, a lot of people are screwed.
Right. Which is, I think that's what's going to happen here if we ban everything. It would be a clusterfuck. Like it's going to not be pretty. As we let it get so big, like someone's going to get burned. Again, the point I was trying to make earlier about all that money being spent on the graphic cards and the electricity is that money is just gone. Like you can't even if you could trace back all the semi-anonymous transactions and try to claw people their money back, a lot of it's just gone. Like it literally was burned and spent on this, which makes it worse than a Ponzi scheme, like worse than a traditional Ponzi scheme. So there's really people are going to get hurt at this point. I don't really know any good way to unwind it. It's gotten so big.
Right.
It's just it's unfortunate. Hopefully people get bailed out in some way, but that's the only way I can really see this not ending bad for retail at this point.
Right.
Unless you have other ideas, I'd love to hear.
That's the thing though. I don't and this is always something that I make quite clear to people who try to criticize my stance on crypto. I don't pontificate about what I think is going to happen because listen, throughout history, we've seen that people get themselves into really dumb situations. They invest into really dumb things and they'll repeat that over and over and over again. It's like they never learn their lesson. And this is not even just individuals, human beings as a whole throughout history. So this crypto could go on for my whole lifetime. Who knows? I mean, I can't claim that, I know, like, and I know there are some people out there who are like, oh, Bitcoin's going down, this is the end. I mean, I think that's irrelevant. It's irrelevant to me, actually. The more popular it gets and the larger it becomes and the more of a foothold it has in the financial sector and in how society views it, I think the criticism is even more important, and it even fits even better, because then you have more people who are part of this scam. It's like, how a small like MLM scheme, a multi-level marketing scheme, doesn't really, doesn't get the headlines. But then if you got a big Bernie Madoff-esque Ponzi, the reason everyone knows about it is because a lot of money was lost. And in that case, we're not even talking about, a small number of very wealthy people. We're not even talking about the sheer amount of regular traditional investors and just like people who just throw money in there that we got with crypto. It's something where
the thing is,
it's something where you don't really have to know the answer to what we can do about it, because the thing is, to me right now, is just to let as many people as possible know that it's exactly that's in the title of your piece. It's a Ponzi scheme.
Mm-hmm. Yeah, and it's worse. I mean, like I said, like the money. The thing is, a lot of I think most of the money now has been clawed back for Madoff investors. Like everyone got it back. It took 10 years or whatever, but they got the money back. But this time it's just not going to happen. It's really not possible.
Right. I mean, if this was something where it was just like gambling or like the lottery, and this is how it was sold, and we could make that argument, I guess, that gambling is bad, but let's not. Yes, I agree, but let's not even go there. But we don't do that. Like, crypto is being promoted as two things. One, which is to me the most problematic, a way to change the entire system, financial system, the internet, how everything works. And then B, it's also proposed separately or together, it depends on who you talk to, as a investment vehicle. And both are very problematic. And neither make the case that, like, hey, it's just gambling. You put what you can and you're going to lose. The house always wins. They don't say that, though. It's every single time. Like, even the press constantly promotes these people who, meet the Dogecoin millionaire. Oh, meet the family who put some money into this and they ended up becoming millionaires. It's unbelievable how much this stuff is being promoted as a win-win-win. Put your money in, cash out, you're going to win. And no one is really taking, not no one, because there's a lot of people who do, but no one in that world, or in the main, honestly, is looking at this for what it is.
Yeah, and regarding the media, I don't really entirely understand it. Like, I've been following this for some time. I pinched it around to like a lot of progressive magazines like a year or two ago, and they just no one's really that interested in it. I guess I don't know if it's because it's too technical, or they just don't get it, or they think it's too obvious that it's a scam, that it's not worth talking about how it's a scam. But people just aren't that interested. And you do get all these puff pieces instead that are just like you said, so-and-so made $100 million. And this has been going on now for 13 years. And getting really bad in the last 6, 7, 8. And there's just not that much interest in it. I'm hoping it changes after this bubble burst this time. But I'm not holding my breath. And like you, I don't make any short-term predictions, because it could go on for a long time. Madoff ran his Ponzi scheme for 17 years, possibly much longer. All the costs involved in running crypto blockchains, I'm a little more skeptical. But we're getting close to 17 years now. So
the issue here, though, is that unlike, I guess, in those other schemes, there is more traditional venture capitalist types who are backing this stuff, which also props it up the whole industry. They may not, they don't have to specifically invest in a specific crypto, but they invest in some sort of Web3 or blockchain technology, which in turn legitimizes it. and says, "Hey, this is a burgeoning new space where if you're a upcoming entrepreneur, you should look at." And then more people get into the space, developing these companies that basically prop up the whole scam, no utility. And then you got, universities going, "Oh, there's a whole industry out there. We got to teach this. We have courses. So, our students going into the world can get into this space if they want to." And that's what I think makes this different than the rest. Madoff wasn't selling his scheme as it was I'll get you rich if you invest in what I'm doing. I know what I'm doing. He wasn't creating a whole new space or industry.
Yeah, and I think it's really gross. I mean, there's a whole cottage. I mean, I can't even call it a cottage industry now. Like Coinbase IPO'd for 100 billion almost. Like there's like major investment firms are launching like the Grayscale Bitcoin fund. Fidelity has one. Like it's becoming a common thing. And most of these companies aren't really investing in crypto themselves. They're just providing custodial services. And for the most part, rushing towards IPO or like going public through like an SPAC or something, because I mean, these people know. I mean, this isn't like the thing I wrote is like not even original reporting. I was trying to synthesize like reporting to simply explain like what's going on to people, since no one in the mainstream press is doing this, and it's just not a secret. These guys know. Like everyone at Coinbase knows, even though they made no mention of Tether in their S1 filing papers when they went public to the SEC, which I imagine they will be dragged before Congress for at some point in the future. People hope. I hope. But yeah, it's just like a parasitic industry on top of a parasitic Ponzi scheme. Just like Ponzi's on top of Ponzi's. And it's gotten so big. I feel surprised by it. I'm like always blown away. But yeah, these people know. It's no way the people at Coinbase are not aware of what we're talking about right now. It's completely impossible. They were not aware of this like 7-8 years ago.
Right.
And they continue operating.
Right. I mean, I should add, I just realized I sort of downplayed the idea of regulating the industry. I'm for regulation. I just think, obviously, that's currently what's going to be needed, because the thing that needs to be done isn't going to be done. No one's going to stamp out this whole space. So regulation is the next best thing that can be done. Hopefully that keeps people away. Honestly, they'll see that there's certain things and aspects that they might not like about it. Once there's some sort of regulatory body looking at this stuff and policies that they have to follow. So let's leave this. Let's leave it here. Your article got a lot of attention, like we talked about earlier. Is there a specific comment or two, or point or two, or rebuttal or two that sticks out to you in terms of like whether it be ridiculous or even good? Maybe someone made a good point so maybe someone defended crypto that made you rethink your position. I doubt it, but who knows?
No one can rethink my position. Like I said, there's like kind of like these two sets of critics. There's like the right wing laser eyed. I'm saying the right wing. They're like claiming libertarian point of view. I think they're descriptors and shills, or people who like got into this thing and don't want to be a sucker. So they're like parroting the same points, and they haven't made their money yet, so they don't want to be the sucker. And then there's also these like other set of people who are making kind of the same arguments through a progressive lens, which as I said, I found a little more interesting. But it's all the same arguments. They say like, it doesn't waste that much energy. They talk about like these edge cases, like we can burn unusable or financially like methane that can't be. I'm forgetting the word I'm trying to use here. There's like these pockets of methane that aren't worth actually like exploiting commercially, and they're claiming that like Bitcoin people can go in and like use this to mine Bitcoin. That stuff is just, I mean, it's all edge cases, so to me it's just misdirection. It also doesn't really make sense because the entire point of Bitcoin mining is to be inefficient, and if you made Bitcoin mining efficient or costless, it would no longer secure the network. It wouldn't even like serve the purpose. And again, these people know this. Like it's just like it's misdirection, it's mystification. Nothing really stuck out to me. I got a lot of talk about how I'm privileged to live in a country with a functioning banking system, which is true. But I mean, there's like case report to people sending money like in El Salvador and like other places in Venezuela. And this probably happens sometimes. I don't doubt that there are people in Venezuela using crypto to send money else out of the country, but that doesn't mean it's not a Ponzi scheme. I mean, like the solution to poverty is not to get people to invest with like Madoff investment securities. That doesn't really like fix the problem.
Right. And it also completely avoids even a more foundational problem here where, all right, your solution is this digital money. These people in these countries you're talking to who could possibly benefit from this, how are they going to even use it when they don't even have the system, the infrastructural system there in that country to provide them with, internet, Wi-Fi, even a mobile device, depending on what countries we're talking about, where that's not even accessible for them. Even at that level, it doesn't solve the problem. And instead of even dealing with that in order to pump up crypto in the long term, they're not interested. Like, you think if this was a long-term deal for you, then you really believe these things would help those countries, those people in those countries, you would deal with that foundational problem first. But I don't see any big push to fix any of those issues.
No. I mean, it's all just greenwashing. There's not a lot to say about it, but I think you should have some of those people on. I've met a few now, and I could push some of them your way if you're interested.
Oh yeah, definitely.
Because they're worth talking.
Yeah, definitely.
I will. I have a person in mind who I thought was pretty good faith, and she seemed like a true believer. I think, though I'm sure she's also heavily invested in this stuff. So it's pretty easy to believe that which makes you rich. So.
No, but for sure, send me those people. I said that at the very beginning of this show. I want to talk to everybody in this who has any interest in this because it's important to hear from the critics and the advocates because that's how you fully will understand the scheme going on here. Honestly, in my opinion, I mean they're going to try to argue different, but I think their arguments probably will end up backing up my overall thesis here.
Yeah. I mean, it will. I mean, but they do that stuff. I mean, it's so much whataboutism. It's so much talking you into circles and you respond to one thing and then they change the subject on you. It's just it's a little crazy making. So I try not to engage in it too much, but it's probably worth doing. I mean, I definitely engaged in those arguments. I read a lot of pro Bitcoin, pro crypto journalism, but talking to them is a little bit much at times for me.
Right.
But I think you should.
I will for sure. Sohale Mortazavi, was there anything else you wanted to say or?
No, I mean, I think we hit all the big points. People who are interested, they should read my article. It's short. And I think I tried to make it very clear. I tried not to get, I wanted to explain how crypto worked without getting too bogged down in the details, to kind of cut through all that mystification. But no, nothing to add really.
Right. No, perfect. So Sohale Mortazavi, definitely check out his piece. Cryptocurrency is a giant Ponzi scheme. It's in Jacobin. Link will be in the description of the podcast and YouTube video. Thank you so much for joining me today. And where can people find you online or anything you want to promote that's upcoming or a website or something? Please feel free to let people know where they can find you.
Yeah, I mean, I'm on Twitter now. I wasn't until this. They can find me there. My name is kind of hard to spell. If you just Google the Jacobin Ponzi scheme crypto, I'll come up and you can find my work too. I write for Jacobin pretty regularly in other outlets. But no, I'm working on some big other projects at the moment, so nothing to super promote.
All right, sounds good. Thanks so much for joining me. Have a great day.
Yeah, you too. Thanks so much. This is great.
And there you have it, another episode of Scam Economy in the bag. And you know what? This is a bag that's safe to hold and no investment to lose here. Folks, once again, patreon.com/Matt Binder to support this show, scameconomy.com for all the links to various podcast platforms, YouTube links, anything you want to know about this show, again, scameconomy.com. You can reach out to me at Matt Binder on Twitter or at my email, which is also on the website, where you can send whatever you're interested in being covered on this show. Send me some links to things you've come across. If you're a crypto critic, a crypto advocate, and you want to talk to me, you can call into the show on the post show via Skype. Or if you want to come on as a guest, you can reach out to me via DM on Twitter or email, and we'll set something up. You can check out my other show on right-wing politics at doomedcast.com. There's so much crap going on in the crypto space that there's no way I could catch all of it, so please feel free to send emails and DMs, and I'll catch you all next time on the Scam Economy.